Good morning to the new chief economist of the IMF, that is Pierre-Olivier Gourinchas. First interview since taking the job and replacing Geeta Gopinath. And boy, what a time to take on this role and to author this report, which is pretty downbeat and depressing. So my first question to you, Mr. Gourinchas, is how much is the war in Russia, in Ukraine, from Russia to blame for this lowered forecast for the global economy?
Well, first, thank you for having me. It's really a pleasure, even if our report indeed is a little bit on the downside. And to answer your question, the war and the sanctions is the primary force behind the downward revision in our report. There are other forces, the slowdown in China and a tighter path for monetary policy in advanced economies, including the U.S. But by far, the driving force here is the impact of the war on Ukraine and Russia, on European economies, on more broadly around the world through higher energy and food prices, and affecting indirectly the U.S. as well.
Wanted to get straight to the U.S. and the idea of monetary tightening, because that is what the outlook is here. You still think the U.S. can grow 3.7% this year, which means that I guess you're assuming the Fed can pull off a soft landing. What gives you confidence that the Fed can do that when we're talking, I don't know, 8 to 10 rate hikes this year?
Yeah, we are talking about another 10 hikes, or bringing the rates close to 3% by the end of 2023. So we are really looking at significant tightening already in our baseline. And I should start by saying that we are facing an environment that is very unusual in many ways. We're just coming out of a pandemic that is a somewhat unprecedented event. And then we have, on top of this, war on the European continent. That's another thing we haven't seen in quite some time. So we have to be humble in terms of our predictions. But yes, in our baseline, we're predicting a modest downward revision of 0.3 percentage point for the U.S. To 3.7. And we are mostly seeing the effect of a tightening of monetary policy and some softening of demand. And as you point out, there are very important downside risks. I mean, inflation could be coming up more strongly than what we have seen up till now and what we're projecting in our numbers. The labor market is extremely tight, so there could be additional wage pressure feeding into prices and inflation further down the line. So all of these things are additional downside risks.
Right. So it's really hard to forecast inflation in this environment, isn't it? When you have supply chain as a major driver. Is the supply crunch getting worse because of what's happening in China? And if so, how can you tell where inflation is going?
Well, we are, again, in our baseline, we're anticipating that some of the supply chain disruptions will ease over 2022. And that's one of the reasons why we anticipate also inflation pressures to peak in the second quarter of this year and then to moderate and abate throughout the rest of 2022 and into 2023. But as you point out, if we have another downside risk is a stronger slowdown in China related to Omicron lockdowns. We've seen some of the numbers coming in yesterday. For instance, there are signs that the economic activity is softening quite a bit in March in China, and that could lead to further lockdowns, further supply chain disruptions. So all of these things are downside risks that we are considering, but they are not necessarily part of our baseline. Our baseline already anticipates some lockdowns and some supply chain disruption, but relatively limited and temporary.
What is the probability of an outright recession in China at this point, with major financial hubs like Shanghai being pretty much sealed off for the past few weeks? They're still dealing with the property debt crisis there. How do you think about recession odds in the world's second biggest economy?
Recessions is not part of our baseline really so far. I mean, we are revising China's growth to 4.4%. This is below what the authorities are aiming for, 5.5. So it's quite significantly below. And that's on the back of, as you point out, some softening in the property sector, a weaker external demand that China is facing because of the general downward revision in growth prospects. And then also the Omicron wave. And here on Omicron, really, it's a race between how quickly, I mean, to the extent the country is maintaining its zero COVID policy, the question is how quickly they can get, especially their elderly population, vaccinated so that they are protected and Omicron is not as much of a risk.
Shepard Smith here. Thanks for watching CNBC on YouTube.